different tack now. Technical analysis. In your experience, does it work?
I think technical analysis is a vital part of successful trading, because you can't just blindly go into a market and say, I think this market's going up, or I think this market's going down. You've got to have some anchor points before you even start there. You can think fundamentally about what is driving a particular market. I mean, the situation that we have at the moment is, whether we like it or not, central bank largesse, which means sort of taking money out of the taxpayer, but it's the money that's coming in from central banks, the liquidity that's being provided by central banks for all the kinds of reasons, which is driving the markets at the moment. This is why, we've got stock markets up where they are, hitting record highs, and yet look how unstable the world seems to be, geopolitically and financially. Okay, so we've got that. That's the fundamental sitting behind there, and you can sort of sit there and understand that and say, well, it's wrong or it's right or whatever it is. That's one side of it. Aside from that, you've got to actually look at price movement and what price is oscillating, and prices hit levels. They hit levels where people decide that that's too high and they want to sell, and they come down to levels where people say, well, that's cheap enough for me, I'll buy. And so on a very basic level, having an understanding of what makes a support line and a resistance line is absolutely fundamental to helping you choose your entry points to getting into a market, and also, most importantly, your exit points. So whether that be on a stop to sort of guard against further losses, or a limit to take profits.
I mean, ultimately, I think you've just answered that, really. That's regarding, can it really help with timing?
Yeah, I mean, I think technical analysis is very helpful from a timing perspective. But, the one thing I would but caution about, is getting too bogged down in TA, because, there's an awful lot of stuff out there. There are, most of the providers now will provide a pretty good charting platform. I mean, there's variations between the standards of charting platforms. But I mean, the stuff you can get now for free is quite impressive. So you've got free charts, you've got free drawing tools, and by that I mean things like support resistance line, trend lines, Andrews pitchforks, Fibonacci, all that kind of stuff. You've got all those tools, and then you've got technical indicators. You've got RSIs, MACDs, moving averages, all that kind of stuff which you can use. But it's important to know how to use them, and not think, great, I've got all this stuff, wow, I can't fail, this is going to make me money, because that's not how it works. It's very important, and this is where the spread betting companies, unfortunately, and the CFD providers and the retail FX providers, they're not very helpful in this respect, is they don't help you to use the tools, and they don't help you to actually filter out what might be useful for any one time and what isn't. I mean, if I could expand on this for a minute, if you think about the technical indicators, there are those that work in trending markets, there are those that work in ranging markets. I mean, if you don't know which ones work in which, then you could be using the wrong tool for the wrong market at the wrong time.
Do you know how many sort of winning traders would make use of TA?
Well, I think I'd be surprised if there are any sort of, I think all consistent winning traders are going to use some kind of technical analysis. I think even if someone says, well, actually, I'm a fundamental trader, I trade on fundamentals, I don't use TA. Well, I bet you they use a support and a resistance line. And to me, that is a form of technical analysis, because it's just simply having a guide to where prices might run out of steam on the upside, or start to come to a slow on the downside. So you're just looking for levels, just basic levels. Even if you're a fundamental trader, you're going to want some kind of guide. Otherwise, you're flying blind.
What do you think of the efficient market hypothesis, EMH?
Well, the EMH, efficient market hypothesis, I mean, that's quite an interesting one, I think, because, of course, you've got to say it was blown out of the water, wasn't it, in 2008, 2009? What we're talking about here is the idea that the market is processing all the relevant information all the time, so you've got perfect pricing at any one time. And from my reading about it, is you can argue about the semantics about what that actually means, and that and if you take it at face value, then it's almost as if prices will never change because or sort of do very little because the market the market is always perfectly processing the information at any one time. It's a bit like, the other thing I think about is, Alan Greenspan saying that actually there's very little need for sort of regulation because, the players out there, the institutional players out there would never do anything so stupid as to harm themselves. In other words, they're not going to take on enormous amounts of risk in the market because, ultimately it's going to do them. It's going to sort of bring down their bank or whatever if things go wrong. Well, we know what happened there. That they were actually cleverer than all of us because they realised that when things went wrong, they were going to get bailed out. So they, I suppose on that thing they are bright. But I'm digressing. But I just kind of think that the efficient market hypothesis is like an awful lot of things. Yeah, it works brilliantly well until it doesn't.